Thank you very much, Dr. Russell, and hello, everyone. It's a real honor for me to be here today, speaking to all of you, and I want to also congratulate the new CPCUs in the group. It's a great accomplishment. Kudos to you. I wish I was with you in California or Hawaii today, especially given the weather here where I live outside of Seattle, but this will have to do. It's an honor to be before so many CPCU chapters. I've spoken to CPCU chapters previously, but it's been the local chapters here in the Seattle area. So thanks so much. I'm going to talk a little bit about Starbucks. I'm going to talk a little bit about risk management, and then I'm going to get into navigating COVID this year. And as Dr. Russell mentioned, I will be taking some questions. I think he's going to share a few during the presentation, and then we're going to have a few minutes at the end. As David mentioned, we have over 30,000 stores. We open a few thousand stores a year, so we're north of 33,000 now globally in over 75 countries. Most people think of us as a retailer, and of course we are that. We are also somewhat vertically integrated in that we have manufacturing facilities. We have coffee roasting plants. Here in the US, one in the Netherlands, and we just begun construction of one or are about to in Shanghai in China. We have retail stores, we have roasteries. Clearly, we have a very large workforce here in the US and Canada. We have over 200,000 partners, which is what we call our employees at Starbucks. The origin of that coming from our real broad stock programs beginning in the early years when the company went public in 1992. We have agronomy efforts around the world. So we have agronomists in different origin countries where coffee is grown that work with growers. We do not grow coffee ourselves, although we own a farm in Costa Rica. It's an R&D facility. Where we do a lot of research, and a lot of our agronomy efforts there are meant to be open sourced and shared with the growing community. We did 26.5 billion in revenues in fiscal 19. Fiscal 20 just ended. Our new fiscal year started October 1st, and we'll report next Thursday. So nothing to share there, but that'll all be out next week. But clearly it's been a challenging year for us and many. And it's been very disruptive from a revenue standpoint. I'm going to talk a little bit more about COVID. But first, Treasury and Risk Management. So that's where we sit. The Risk Management team is part of Treasury, which is part of Corporate Finance. I report to the Treasurer of the company. We have a team of Treasury and Risk of 38 partners, 23 on Treasury, 15 on the Risk Management team that I lead. We're located here in Seattle. I say here in Seattle, although I'm sitting across the Lake Washington in Kirkland, Washington, because our main office is closed, and we've recently announced we're going to keep it closed until October of 2021. And we're going to reimagine the workspace, which is currently about 1.4 million square feet, and design something a little bit more forward thinking and with much more of a hoteling sort of culture in mind. So that's where we are in terms of our plans for the next year. We are in Treasury, of course, managing cash, investments, debt, financial risk. The risk management team that I head up is focused on what we call the traditionally insurable risk. The casualty, general liability, workers' compensation, property, other lines of insurance coverage. We focus on that. We lead those efforts, and also our self-insurance efforts. So I'm going to talk a little bit more about that. But I wanted to also, now that we've talked about risk and Treasury and risk, just kind of start high-level risk management, because although we have a team that has the label risk management of 15 partners, there are risk managers across our company. Just to name a few, we have large teams in the business continuity and security space, data security and privacy. Public affairs, I would argue, is one of the teams that does a lot of risk management day in, day out. Internal audit, obviously, they're the ones who are internally at Starbucks auditing the risk plans that are owned and enforced at different business unit levels. And so familiar with enterprise-wide risk, legal and compliance, global security, quality assurance, and quality assurance both in the retail store food space, and also they do quite a bit of R&D work. And that's a very large team, and especially during COVID, they've been very active in the retail store safety space. So those are just a few, and I think it speaks to the fact that any large company, leaders across any large company have risk management as a responsibility. And again, business units across Starbucks own risks, are responsible for controls and mitigation initiatives. And we all partner together. And at Starbucks, we do have an enterprise risk effort, a committee actually that meets nearly monthly, I'd say 10 times a year on average. And we bring risk owners before the committee to speak about, the risks that they own, most importantly about where the gaps and vulnerabilities are and where there are needs. If you are interested in learning a little bit more about some of these big risks, I'd point you to the shareholders report. And every year, in that report, you'll see, as most public companies report, a risk factors section, and it speaks to really what the company deems to be its greatest risks, and the extent to which they can be managed. Some risks are not all that manageable, such as macroeconomic risks that affect a retailer like ours. A few of the risks you'll see in there in our report speak to that: economic conditions in the U.S. and international markets where we have a large presence, like China and Japan. Incidents involving food or beverage-borne illness, tampering, adulteration, contamination, mislabeling, data security and privacy, which I spoke about. A few that you might not think about: brand execution and brand relevance. So what do I mean by brand execution? How well are we executing on our strategic priorities? And again, as we talk more about COVID, we've had to pivot in some ways to meet customer needs around convenience. But brand execution really speaks to how well are we executing and meeting our customers' ever-changing needs. Brand relevance: how relevant are we? Do we have the product mix and the technology offerings that our customers seek? Business continuity and resiliency, competition across all international markets and channels. We're commodity risks, coffee being one that probably comes to mind, but we are a large buyer of milk, another volatile commodity, and paper and plastics and others, diesel. Other supply chain disruptions. These are the types of risks that you see mentioned in the risk factors section, and these are some of those big organizational enterprise risks that we face. Now, drilling down a little bit, just specifically to treasury and risk management and some of the risks that we manage and risk. First I'll start with workers' compensation. This is a big driver of cost for a company of our size with a couple 100,000 partners. And although we don't have a hazardous workplace by any means, the sheer size of our organization and the rapid pace at which our partners work lends itself to us having claims. Since a lot of you are in the California market, I'll say that we look at our workers' compensation program as California and everything else. And literally, we get actuarial reports that break out loss picks for the state of California and then all other states. We've done that for years. Although California has improved a great deal over the last 15 years, I think, it's still a higher loss rate for us. But the bulk of our claims costs originate from California, despite the fact that it's only about 25% of our US store base. We've got well over 2,000 company-owned stores in California. When we look at workers' comp, we see over 6,000 claims per year. Today, as I speak with you all, we have about 2,000 open claims for current and prior years. The vast majority of our partner injury, our workers' compensation claims, are going to be slip and falls, trip and falls, strains and sprains from lifting and moving items. And then you get into other types of injuries, burns, lacerations. To be frank, burns do not present a lot of significant injury to our partners. They tend to be minimal in nature and easily treated. On the customer side, which I'll get to in a second, we do see some claims that are more significant. Thank you. And that's a delivery from my son. I just want to say to everyone, happy bring your kid to work from home year. The claim count, the number of claims, the annual loss pick there, which is north of 50 million. This is a big exposure for us. As you would imagine, we largely self-insure this exposure. So in the state of California, we are a qualified self-insurer and have been for many years, almost 20 years. And that just means that we pay the first $1 million of claim costs. And then we have excess comp that sits over that protects us should we have any severe claims that exceed that amount. We in fact have that same retention deductible across the country. So in addition to California, we self-insure in 6 other states, Washington being one, where we're based, in New York, Illinois, Texas, Pennsylvania, Ohio. Effectively though, even in the states where we're not qualified to self-insure the coverage, we have insurance with $1 million deductible. So again, we're retaining the first $1 million of workers' comp claims costs. I'm gonna just check here. I've got a few questions coming in. I'm gonna see if there's anything that I should speak to right now. I'll get to some of these a little bit later. Comp is something that we dedicate a lot of time and resource to. Our team of 15 includes 9 partners that manage the workers' compensation function. So we have a manager of that team. She's an RN. She's got a master's degree in nursing. She's got decades of experience in occupational safety and health, nursing, and workers' compensation. Over the last 6 years, she's really built our team into, I think, one of the best workers' compensation claims management teams in the country. And she, Noreen Olson is her name. She and her team have been acknowledged and won a number of national awards recently, mainly for not, so much the reductions in claim costs, but the advocacy for our injured workers. That's what we focus on, right? When our partners get hurt at work, we want to take good care of them. We want to make sure that they have all their questions answered. We want to make sure that their pay, where they're missing time from work, is prompt and on time. And we do all these things for their benefit. And the result of that, of course, we see is, claims costs are minimized. But we put a lot of energy into that space, as we should, because we've got to take care of our people. That's first and foremost in our culture. On the general liability side, so when it comes to customer claims, this is actually a significant exposure for us, but not quite the same in terms of aggregate expense as workers' compensation. We have under 1,000 claims a year, and that would include claims and lawsuits. It would not include things that are retained and handled in the customer relations space. So the vast majority of customer incidents at Starbucks are going to be managed at the store level through good customer service, or they're going to flow up to the customer care team, who is even in our case equipped to make some small payments for minor property damage claims and very low level bodily injury claims, well below the Medicare reporting threshold. And then that which they can't handle is going to come up to our in-house general liability adjusters. We have 3 of them here. And then we have a fairly significant legal department internally with a litigation team that we work with on those cases that become litigated, which is obviously a small percentage, but we still have hundreds of claims in litigation at any one point in time. In terms of types of claims, you're going to see, I'm going to just move my mic a little bit closer and make sure that the sound is projecting well. Hopefully that's a little bit better. In terms of types of claims, a lot of our customer claims are on the premises liability, you know, trip and fall, slip and fall, issues with furniture, issues in and around the store and outdoor seating. We've really seen everything. And of course, you know, we are very quickly responding to incidents that come into us and trying to get early on, get on top of these matters and resolve them and keep them from becoming litigated. But we also get claims that we need to deny because we frankly just don't have any legal liability. And we need to, you know, draw a line. And many of the cases that become litigated are it's either an issue where we've denied a claim where we don't feel we have liability, or we're just really, you know, far apart in terms of valuation. But this is one area where we retain quite a bit more in terms of the risk. So we have a $10 million self-insured retention. All of you on the call are aware that the market is a little bit more challenging place as of late, and we've recently gone from 5 to 10 million on the general liability self-insured retention. You know, that gives us control. That gives us the ability to make decisions on cases, on claims and lawsuits. It gives us the ability to decide whether something is worth fighting. Gives us the ability to decide if we want to resolve something quickly. And it gives us control, counsel, and all those things. So that's something that's really important to us because, again, nobody is going to care as much about Starbucks brand as Starbucks is. So at the same time, we buy a whole bunch of insurance, right? We buy hundreds of millions of insurance, but that sits on top of that retention, and we have control under that level. David, I'm just going to make sure that my sound is projecting okay. I did get one comment that was getting a little hard to hear.
I think you're coming through fine, Steve. Okay. I turned up my volume, and then
okay, great.
Your mic correction helped a lot. So
okay.
While I have you in your ear, you were talking about outdoor seating.
Yeah.
And because you have physical locations, like Los Angeles, I know Seattle has some challenges with homelessness.
Yes.
And I'm wondering how the homelessness and housing crises in cities have affected Starbucks and your tools.
Great question. And it's been, this has been something that's been impacting our stores for several years, not just 2020. But several years ago, I was on a committee that was mainly a retail ops committee that was focused on how do we provide more support to our stores. Our restrooms, or at least for the last couple of years, have been open to everyone, customers and non-customers alike. Now, during COVID, we've shut them down for the most part, other than certain individuals. But for the last several years, we've had challenges in a number of urban markets, and they've presented great hardships to our partners who are dealing with individuals doing things in the restroom that are not what the restroom is for, whether it be bathing, drug use, and other things, leaving behind paraphernalia that's been a risk to partners and to customers. And it's been a very difficult thing in some cases. And I know in the Los Angeles region, both here in Seattle as well, in prior years, some managers have had to just shut the bathrooms down because the risks were so great. And that's not what we want to do, but it's been the reality that we've had to deal with. And another part of that reality is that the challenges that we faced are not necessarily grave enough such that law enforcement is going to come and help us out because they've got bigger things to worry about, you know? So if you've got somebody who's passed out in your restroom from alcohol or a drug overdose or something else going on there, you got to figure it out on your own. So our stores have become, our store managers in certain markets have really learned different ways to deal with and manage those risks. Now, beginning with the closure of our cafes early on in the US COVID pandemic, We were dealing with COVID in China before the US, but we don't have those same types of challenges in our stores in China. But we made the decision to close our restrooms down because we also, we closed the cafes down pretty much for in-store purchases, and we were focused on drive-throughs and contactless, pickup outside the store. We've continued to keep the restrooms closed, other than for our partners. And again, there are some laws that dictate that we have to open our restrooms for certain individuals with certain medical conditions and whatnot. And so we continue to comply with those. But this is going to be an interesting thing, I think, David, to see how when we start to turn this back on and as we open our cafes fully to full seating, what do we do about the restrooms? What does that policy look like? Is it altered somewhat? I think either way, the challenges around homelessness and misuse of the restrooms are going to continue. And I think it's going to be through a combination of policies that we develop and retail partners doing what they need to do in the moment to best manage those scenarios. We definitely get claims, whether it be a needle stick, claim from a partner, or maybe there's other issues with the paraphernalia in restrooms, and we've had people overdose in restrooms, and things like that. So I could go on and on. I'm gonna move on from that. It's a big risk, and it's especially challenging for us because of up until recently our open restroom policy.
Also in the chat is another somewhat related, is about mask. 2020 has been a challenging year in so many ways, not only the pandemic, but racial justice concerns and mask wearing and the political tensions surrounding that. And Starbucks being a physical location in virtually every market is visible and an easy target and well publicized. How does that conversation go internally about how to approach that?
Well, let me talk about masks, and then I've got a few minutes a little bit later where I'm going to talk a little bit more about civil efforts to improve and civil rights efforts, diversity, inclusion, and equity. But in terms of the masks and dealing with that issue, that's been a big challenge as well. We were one of the companies that early on said globally, we're going to respectfully request that our customers wear masks. Our partners do and still do. And that's an easy enough policy to put in place. The enforcement piece of it is the challenge, because we don't want any partner to put themselves in a situation where they might be harmed or get into a physical altercation with somebody around this issue. We've had a few of those incidents. Some of those have been, publicized. Fortunately, we're seeing less of that now. But from day one, or from very early on, we've had the mandatory mask policy. And I think we've been able to point to customers that for whatever reason couldn't or didn't want to wear a mask, that we have drive-throughs. We have curbside pickup for customers that don't want to come inside. And these are things that you can do as a customer and not have to wear a mask because either you don't want to, or because you have an underlying health condition, or there's some other challenge. So that's continued to be something that many, many retailers have grappled with. We've erred on the side of protecting our partners and other customers and being compliant. Fortunately for us, many of the altercations and disagreements, have really waned in recent months. So great question. I think, and we were talking about general liability. What we're not seeing is many claims. People saying, I got sick because I went to Starbucks or something like that, or your partner didn't have a mask on or did something improper, which is a great thing. And it speaks to the protections that we put in place and the operational changes. Really quickly, I want to talk about risk financing, then I'm going to get to COVID. And I know that we've got about another 15 minutes maybe before we get to questions. On the financing side, in our team risk management, we We both manage the procurement of insurance that we buy. We manage the self-insurance reserves for those risks that we retain. We do have a captive insurance company. Somebody asked a question in the chat about that. We've had one for nearly 20 years, and traditionally we've focused on casualty, workers' comp, self-insured workers' comp, and liability. Our captive is domiciled in Vermont. In terms of other things that we do in risk that I'll speak to just really quickly, in addition to the insurance procurement space within the risk financing bucket, we're doing a lot of contractual risk analysis. So we're helping the business, whether it be real estate and leases or other parts of the business that are managing contracts, we're helping with insurance and indemnity language. More so the insurance language. We're not attorneys, but we know our way around these agreements and can help point to errors and indemnity provision language that need to be improved. So we spend a lot of time on that as well, and training really across legal and sourcing around good contractual risk management. So let's get into a little bit more about COVID and managing 2020. David mentioned the question about masks. I'm going to cover this. I'm also going to try to cover a little bit about what Starbucks is doing on the civil rights, diversity, equity, and inclusion front. For COVID, I mentioned earlier that we have nearly 5,000 company-owned stores in China. So this reality for us started back in January mainly, and was really around January 24th or so, I believe, when people across China were going home for the Lunar New Year. We started closing our stores at that point. Given what was being seen locally with COVID infection rates and spread, and then some requirements there, and that was something that we got to nearly 90% of our company-owned stores there being closed. In March, we started to communicate with investors about the impacts to our business. There was a letter to shareholders in early March that spoke to the extent to which we closed stores. At that point, we were starting to reopen, and we were communicating about how that business was coming back, but more importantly, what we were doing to protect our partners there in China and our customers. And to be honest, it looked a little bit different in that market when we started to reopen, because in that market, some things were similar, where we had more contactless, mobile order pay, pickup, the equivalent of like curbside that we have in the US. While we were doing a lot of that early and didn't have seating necessarily, we were doing things like temperature checks of customers, which was a little bit more common and accepted practice, I think, in China versus the US. I mean, there's not a lot of retailers that are doing that here. That's something that we get when we go to the doctor or the dentist, or in our case, when we go to our corporate office to go pick up mail once a month or something. But that was something that we did in China. Beyond that, it was personal protection. It was obviously masks. It was increased sanitization. It was, more frequent hand washing and all these types of things, which we do in food service to begin with, because of the various risks associated with, across the space, right? Non-COVID related risk. So that was something where we learned in China how to start reopening, how to do it safely, what resonated with our customers, i.e. the minimal contact transactions, the mobile order payment, which was already very prevalent in that market. We learned a lot from China, and then of course we started to see impact in the US. So that for us was late March when we started closing stores, similar to China, although we did not close nearly 90% of our stores. I think at one point we had about 45% of our US company-owned stores open. They were all drive-throughs. So we took the extra step, sort of late March through April into May, of closing cafes, even though we had the ability to do a mobile order pay, pick up at the door, and that would have been allowed. We made the decision to close those cafes anyway, in part just to err on the side of caution. But also we had to recognize that we had some partners that didn't want to work, and maybe didn't feel comfortable coming to work. And a great point I want to share on that is during that period of time, both in China and then in the US, when we closed stores, we continued to pay our partners. We paid them full wages. And, in that period of time, we had a pretty considerable cash burn rate. But because we were not operating enough stores to be profitable, but we were still paying our partners. We did that through May and into early June. And then we also paid a bonus, an incremental $3 an hour for retail store partners that were working and staffing those drive-thrus that were open. So we made an investment in our people. We did not seek PPP money from the government. What we did to shore up our balance sheet was we did a couple of incremental debt offerings. We borrowed an incremental $3 billion through bond issuances that were beyond plan. We shored up our balance sheet, made sure that we had the liquidity to continue to do the things that we wanted to do, and again, take care of our partners. Then we started to reopen, and I think as we reopened, we were able to borrow from our success in China in how best to reopen safely. And again, what really resonated here was the mobile, was the app. Mobile order and pay went from our Q2, which ended in March, it went from 18% of transactions to 22% in our Q3, which ended in June. And, we continue to see growth there. We've continued to see busy drive-thrus and continued through, the closures. And as we started to reopen our cafes with no seating or limited seating, we continue to see, things like curbside, which we've been rolling out, where you can order on your app and then have the coffee brought out to your car in the parking lot. And everything that we've done to comply with guidance and to operate in a safe manner. We've seen the business come back. We're not fully back yet. And again, we'll hear next week how we ended the fiscal year as earnings comes out Thursday. But I think the points to make, there were both in China and in the US. Our focus was on our people. It was about making sure that we are keeping them safe, providing a safe environment for our customers. And we were also investing in our partners by paying them so that they didn't have, that income loss during those periods that their stores were closed. I'm going to pause for a second and look at some of the questions here. And there's a question about store design, and this is a really good one because we really have talked a little bit internally and publicly about pivoting to get even better resiliency. Not because we expect, a pandemic to come around every other year. We don't. But our customers have really embraced the convenience, so drive-through, curbside pickup, mobile order and pay. These are things that resonate with customers at any time, right? And we've looked at the store design, and in certain urban markets, we've said, look, maybe it makes sense to have a smaller footprint in this particular location, and to have a larger plane for mobile order pickup, and to have a window for kind of essentially like a curbside at a store. We've started to look at that, and over the last year, we had even been experimenting with some of these smaller footprint in urban market locations. So we're definitely altering our strategy when it comes to store design. And you're starting to see that now. That takes time, to roll out some of these new designs and shift locations. But we are in the process of doing that. And I think that we think convenience, that added convenience, is going to be something that continues to resonate with our customers. And we also recognize that certain behaviors are permanently disrupted, right? I mean, there's going to be a sector of the workforce that isn't taking the subway or the bus or driving to work 5 days a week. And we need to understand that, how that impacts our business and adjust accordingly. So thanks for that question. That's a really good question. And so back to COVID, I wanted to point out, so I mentioned the investment in partners. I mentioned the extent of closures in China and the US. I think that the other thing that we've done a great job of is communicating. So we've communicated both with our partners about what we're doing to improve the business, to take care of them. And it wasn't just pay where we made investments in partners. We've added numerous benefits, especially in the mental health space, that were sorely needed, by our partners and many during a really challenging year. And I think that although we're in a position now, where our business is really doing much, much better and nearly fully recovered, we're still not back to full seating in most areas in the U.S. that we operate. Although in China we are much more near that. David, did I miss any critical COVID questions that might have come through? I've got quite a few that I'm looking at here, and I want to make sure that I'm addressing any questions that the audience has while we're on that subject.
One question I think that Cedric put in the he's given us several, but in terms of compliance, so the sands of both federal and state and local guidelines have changed and changed again, and there was confusion. I think things are much more stable than they were.
Yeah.
But do you have, shall we call it a mystery shopper, or do you have an internal inspector? You mentioned internal audit, but how do you make sure that you have a location that's sort of using the right playbook?
Yeah, that's a good question. I think we do some field safety audits, and that's led by our safety and security team and global safety and resilience. I think that I didn't mention this earlier, but keep in mind that when I say company owned and operated stores, these are truly company owned stores. We don't have any franchises, so we have the ability to manage our business quite effectively. The only licensees that we have domestically are, through the large partnerships with, Albertsons, the Safeway, Starbucks, those are Safeway employees. Target, those are Target employees, and that's their workforce and operations to overall manage. But we do a lot internally, to check in on stores to make sure that we're following policies. And there's just been so much communication to retail this year about what those policy changes are, and guidance for retail partners on how to deal with things such as mask policy, and other new things that we've layered in during this year. I think in terms of compliance, I'll just go back to the fact that we erred on the side of caution when we came out early with the mask policy. That was a national policy. It wasn't tied to one state or one county. It was based on CDC guidance and maybe the most the tightest restrictions where we did business. When we closed down our cafes and when we didn't necessarily have to, we did that nationally, even though there were many places where we could continue to operate and were deemed critical, being in the food and beverage space. So we've erred on the side of caution. I'd also point out, I mentioned our quality assurance team earlier, but we have a lot of people in our organization that are former county and local health authority or CDC employees. We have a team, and we have always monitored very closely the changing rules and laws across the country, and in many cases are aware of that before it becomes public. So that real-time access and those connections that we've established in our quality assurance function for retail were really invaluable to us because it gave us more time to act and more information to act with. It's been a challenge, I think, for companies that didn't have maybe that access or that internal resource to take that on.
You mentioned risk financing earlier. Later this afternoon, we're going to be talking about hardening of the market. And you mentioned that you buy a lot of excess cover over your retentions and you use a captive without speaking to proprietary issues. At least the trade press is talking about a hardening market, and we will be talking about that on a panel later. Are you seeing the same things that others are seeing in your renewals, that there's upward pressure?
Absolutely. And we just went through a renewal 10-1, and I'll a couple points I'll make on that. I mentioned that we increased our retention on the liability program from 5 to 10 million per occurrence. We on the excess liability tower, what we're seeing, I think, in the market is less capacity at the carrier level. So maybe we used to need, 20 carriers to get to a couple $100 million tower, and now we need twice that many carriers because they have less capacity. We saw that. We definitely saw pricing impact. I mean, I'll tell you guys, we, even with the doubling of retention and procurement of a little bit less limit on our excess liability tower, we still more than doubled our premium for excess liability at this last renewal. At the same time, we've seen some coverage restrictions. Kind of the latest amendment that we're seeing in the excess casualty or excess liability market is a whole host of virus and communicable disease exclusions, where coverage for COVID specifically, pandemics as determined by the WHO or just about any other organization, global, national, or local, are not covered. And we've seen full communicable disease exclusions that speak to nothing considered to be a communicable disease is covered under these policies. So in our case, being a food and beverage company, we needed to work hard to make sure that the exclusionary language that we saw on our forms, on our excess liability forms, is really limited, because we didn't want to lose coverage for things like foodborne illnesses and other things that can happen in the foodborne or in the restaurant beverage space, right? We did that. Others were less fortunate and ended up with broader, exclusionary language around not just COVID specifically or pandemics, but also other types of communicable diseases. So on the one hand, we saw pricing impact. On the other hand, we definitely saw some coverage, restrictions that hadn't existed previously. That's excess liability. On the property market, we ended up taking our property deductible up from 1 million to 2.5 million. We had planned on doing that, quite frankly. We can easily retain a store or a couple stores. We really buy property insurance because we have large manufacturing roasting plants that are worth hundreds of millions of dollars, and we have other concentrations of risk. But we're not too concerned about, a couple stores or a few $1 million loss. So we definitely saw it in casualty. We didn't see it in workers' comp, but we saw it on the liability. We saw it in the auto space and in the property space. And, directors and officers liability, that's been a challenging market. We're just going into the renewal timeframe on that now, but that's been a real challenging market as well. Sorry.
No, go ahead. No, go ahead.
So I wanted to talk a little bit also about, diversity, equity, and inclusion. So, I knew that there would be a question on this, and, I mentioned to David that I'd be happy to speak about a couple things that that Starbucks has done in this space. As it was mentioned earlier, I'm a 23.5-year partner of the company. One of the reasons I've been with Starbucks for so long is I've always been very proud of the kind of company that we are. One focused on its employees. Again, we call ourselves partners, focused on the communities that we do business in and serve, not just in the United States, but in countries like the UK and Japan and China and Thailand and Saudi Arabia and 75 countries around the world. What I've come to understand is that we contribute to communities everywhere we do business, and we've always been a very welcoming and inclusive company. So I've seen that firsthand, but that doesn't mean a whole lot to anybody I talk to who doesn't really know that much about Starbucks. So I kind of wanted to just talk a little bit about some specific things that have been done in the last couple of years. We had a really high profile racial incident in Philadelphia back in the spring of 2018. If you don't remember, it was a case where a young woman who was a manager of a local store asked two African-American men to leave, essentially, saying that they were not buying anything. And this got a lot of press. And I'll tell you, at Starbucks, we were pretty shocked, and it was one of those things where it forced us to look in the mirror and ask ourselves, this is an area in terms of, being welcoming and inclusive as a company everywhere we do business that we think we're doing a good job around, yet, we've got gaps and we've got vulnerabilities, and what can we do to improve? In the aftermath of that incident, there were a lot of changes. There were a lot of things that were done here. This is back when Howard Schultz was still our CEO. and chairman, one of the first things that we did was we closed all of our stores in the U.S. for an afternoon for some anti-bias training and everyone went through that, not just retail stores. We in the Seattle office went through that. I went through that. And it was the beginning of a journey to learn more about how we as a company could be better at one of those areas that was of great importance to us. After that, we took a number of other initiatives, including onboarding Covington and Burling and former Attorney General Eric Holder to perform a comprehensive assessment of Starbucks' commitment to civil rights, equity, diversity, and inclusion. This was a 62-page report that was published January of 2019. We open sourced this. We shared this with everyone. It was meant to assess our, commitment in this area and address where we had vulnerabilities, where we needed to improve. And we didn't think that it made sense to keep that internally. We thought that it made more sense to share that with others that might be interested. And we started building upon our practices, embedding new training in our hiring practices and in our retail training. We did an updated report that was published in February of this year, again by C&B, and it was a follow-up report on the company's progress to promote civil rights, equity, diversity, and inclusion. And so again, we're talking about a thorough analysis of our policies and procedures. We've made additional changes in terms of training. We've onboarded a Chief Inclusion and Diversity Officer, Zing Shaw, in December of 2019. And just last week, or perhaps it was the week before now, we came out with a pretty bold announcement regarding our efforts to advance our culture of inclusion, diversity, and equity. We've made some significant commitments to ensure that by the year 2025, that we achieve representation of 30% at all corporate levels, Black, Indigenous, person of color, BIPOC, 40% in manufacturing, distribution, and retail businesses. And we've gone a little step further and said, we're going to tie executive compensation in some ways to these goals that we're setting for ourselves, and we're going to continue to monitor and report on how we're doing as a company. There's a number of other things that we've done over the last 7 months to demonstrate, our advocacy for justice, racial justice, for inclusion and diversity. There have been investments that have been made. I don't think we seek a lot of publicity on some of those investments that we make, but we are doing a lot. And I felt that for many years we were doing a lot in the space. I've been really proud that Starbucks has doubled and tripled down to ensure that we're continually improving in this important area. So really timely, I think, that to mention that, and especially to a group as large as this one. I know we're at 9:17, and I want to allow maybe some questions on that topic, or on COVID, or on risk management, or anything. Although I don't know the latest and greatest drink that's out this week. But I'll take questions on the business that don't have to do with risk management as well.
Yeah, Steve, Cal State Northridge is the second most diverse educational experience in the country. So DEI is something that's very important to us. Mm-hmm. You and I are white males, but the mm-hmm. face of LA is kind of the future face of America, in my view. Mm-hmm. The Midwest isn't perhaps quite as diverse, and you have a global footprint, and maybe you have an edge in learning what's going on worldwide. Mm-hmm. But it's nice to hear your leadership and action behind it, not just reports and put them mm-hmm. on a shelf somewhere. And you mentioned questions about the business. Alexis, one of my students, is clearly a barista and has some concerns about, if the business doesn't recover, what headcount might do. And I know that's not necessarily your department, but what are your thoughts about, I had another question about sales volume from the fewer meetings. So many people use Starbucks as their satellite office. What are your
Great question, Alexis. I noticed that and was going to speak to your question. The reality is during the depth of the pandemic impact to our business, which was really late March, April, May, where we had more than 50% of our stores closed. I mentioned the fact that we continued to pay our partners. There was a gap between labor supply and demand in the business following that as we started to come back. We clearly were not hiring at our normal rate. We were trying to seek a balance between supply and demand by offering some leave of absence programs to some partners. And then there were some partners, that were given, a severance option, it was a few weeks or something like that, partners that were maybe planning to move on. But there were no massive, large scale store closures that were permanent, right? So we're now up to 97% of our company owned stores in the US open. And we're back now close to a balance between labor, supply, and demand. Where it's probably affected some partners is hours, right? Maybe if there's that imbalance, maybe they're used to getting 30 hours and they're getting 28 or something like that. But we haven't had any large scale reduction in force or layoffs, either in the retail, manufacturing, or administrative office. We continue to hire in our office, in fact, although we don't have as much turnover right now because people aren't moving from one job to another. So that's a great question. And I think, again, our business is largely recovered. We've got a lot of momentum. So, we hope that we don't get to a point where we have to close a bunch of stores down. But I think what we've learned in managing COVID, both in China and now in the US, is that even if we dial back, so to speak, we can keep our cafes open and we can actually, utilize mobile order and pay and curbside and drive-throughs to operate a much higher percentage of our stores, even if, the pandemic, the course of the pandemic and the guidance at, local and state levels, is what it was back in April and May.
Steve, when you think about risks, do you think about HR being the number one? Do you think about GL? Do you think about brand? Do you think about them holistically?
Yeah.
What sort of is the number one if you had to pick?
Yeah, a couple of years ago, I would have said, and our enterprise risk management efforts would say, that the top risks were things like food safety, data security, and privacy. I think now you get to some of the points I made early on about brand execution and brand relevance. Think about brand relevance again, right? If we're not adapting and demonstrating agility in the course of a pandemic that's forcing our operations to completely change and consumer behavior to change, if we're not agile and able to remain relevant to our customers, to their needs for contactless, transactions, mobile order, nothing else matters. I mean, that's just too harmful to our business. So brand relevance and execution, how effectively are we executing our strategic priorities? We need to do those things. We need to do those things well. And I think that maybe has risen above some of the traditional sort of enterprise-wide risk. I will say with regard to the risk management, managed risks, so the general liability, workers' compensation, property, or even in the treasury side, hedging commodity risk, none of that rises to the level of, top even 20 or 30 enterprise risks. Those are manageable risks that we can manage with insurance and hedging and self-insurance. And they don't really rise to the level of, disrupting earnings in a material way.
You mentioned data security and cyber liability and that sort of thing. I'm a frequent user of the mobile platform, and I have payment methods and personal information.
Yep.
Again, without being too proprietary, where does that stand? Have you, evolved that over time?
Yeah. Great question. We have a large security infrastructure, both in the cybersecurity space and then also over in legal. We have a data privacy officer and a data privacy team, and so I work with both of those leaders We do maintain some cyber liability insurance for the company. But more than that, this is an area where we put resource and energy and capital to mitigate the risk. We don't want to have an event in this space. We want to make sure that we have adequate mitigation. So these are large organizations. This is obviously very important given our digital investments and our dependence upon things like mobile order and pay, and we collect information from, quite frankly, our most loyal customers, right? Our loyalty program, those that subscribe, the 18 million, maybe it fell in Q3, but almost 20 million members account for 50% or more of our business. So this is a significant risk. It's something that's called out in the risk factors, and it's one that we put a lot of energy and capital and headcount into managing, and it's something that is frequently presented to a risk that's frequently talked about at the risk committee and also at the audit and compliance committee level.
Steve, we're about out of time, but we are so grateful that you took time out of your day to spend with us. Your status as a CPCU, as well as your associate in risk management, brings a special quality to our CPCU event. So thanks for getting us current on what Starbucks is doing on risk management, on DEI. I'm very grateful for your knowledge and commitment to education and the insurance industry.
Thank you. And I'll just say, look, I know there were some questions. There were a lot of questions and some really good ones that we didn't get to, but feel free to reach out to me, on LinkedIn. If you have questions, I'd love to connect with you and talk more. So thanks again.
Thank you.